in the property market, the Supreme Court has taken a big decision. It will be a huge impact on the real estate sector. The Supreme Court has made a scathing attack on tax evasion made in land and property deals. These deals were done through partnership firms. In fact, for decades, rights of land parcels, property and redevelopment rights of partnership firms worth crores of rupees were being transferred without payment of tax. Supreme Court has brought such transactions under the tax net. Let's understand how tax evasion was happening and how the Supreme Court banned it. Large property deals in India are usually done through partnership firms. 2 to 3 partners form large property holdings together. These properties were re-evaluated on the basis of market prices. Then a new partner was added to the firm on the basis of revaluation. The new partner used to buy a stake in the company and the profit was distributed amongst the rest of the partners. The property here was neither sold, bought nor transferred. Therefore, this whole process was out of the tax net. In this way, the partners did not have to pay stamp duty, nor did they have to pay capital gains tax. Whereas in normal circumstances, stamp duty and capital gain tax have to be paid in the purchase or transfer of property. In such a deal, the new partner has control over the partnership firm in which capital was invested and withdrawn. In normal circumstances, the buyer of the property has to pay stamp duty while the seller has to pay capital gains tax. Now let's talk about the Supreme Court's decision. It will curb such instances of tax evasion. The Supreme Court in its decision held that even if the property is re-evaluated in this way, so the re-evaluation surplus, that is, price appreciation, will come under the tax net. Capital gains tax will be levied in such cases. After revaluation, the firm will have to face tax liability. That is, the previous owner of the firm, which is the real owner or seller of the property, cannot avoid tax while withdrawing the sum invested by the new partner, that is, the buyer. Pradeep Mishra, founder of real estate firm Homents, says that the Supreme Court's decision has brought property deals effected through partnership firms under the tax net. Such a move will increase transparency in the real estate sector. The partnership firm should pay taxes instead of finding ways to avoid it. This will also increase the government's revenue earned on levy of capital gains tax. Mishra says that the apex court has clarified its position regarding capital gains tax. However, there are some more loopholes that need to be addressed. Such cases should be treated as property transfer and should attract stamp duty and registration charges.